The EURUSD started the week with buying pressure but ended up closing below the 1.09 psychological. The key price driver for this currency pair was the market sentiment, betting the US dollar against the euro due to the monetary policy change. The EURUSD price traded below the 50% Fibonacci retracement level from the 1.12 high to the 1.04 low, which is at the 1.08 level. As the current price trades below this crucial resistance level, we may consider the upcoming price direction as bearish. In the weekly EURUSD price, technical indicators have lost bullish momentum and moved to the neutral bearish area. Although the current price trades above 20 and 100 simple moving average levels, both lines head marginally lower, suggesting a minor buying interest. In the daily time frame, the technical indicators move firmly lower, while the dynamic 20 EMA is acting as a strong resistance. In the EURUSD outlook, the 1.09 level would be the immediate static resistance, where a bullish break above this level could open room for reaching the 1.10 level. On the bearish side, if the price remains stable below the 1.07 level, it could lower the price towards the 1.06 level.